Welcome to Mad About Money. Today we're going to talk about what's happening on the markets and the global economy. We'll discuss that interest rate decision yesterday, and we'll have a look at what's happening with the media stocks, some of which have been absolutely battered. I'm Peter Switzer.
I'm Peter Switzer.
And we're mad about money. Pete, for markets, obviously we've had a very good run, but over the last week there has been a pullback. Dow down, I think, for about the sixth straight session now.
But there have been little falls, haven't until today. Pretty big one today.
First question, have you gone negative?
Yeah, that's
I did read the subject line of your Switzer Super Report article.
Yeah.
I didn't actually read the article, but the subject line implied that you've gone negative.
Yeah, gone negative for the time being. My last thing I said was I'm not a sell everything kind of guy at this point in time. I think the market's run hard. Remember, we went up 6% in July. That is a big rise, and we're up about 18% since mid-February. So it kind of makes sense.
Do you think there's a positive pullback?
Oh yeah, for sure. I think there's going to be another buying opportunity. I think earnings season will be probably good, but because the market's run up so hard, it's easy to say, well, maybe the market's run up too hard, and the earnings season will be the testing point. But we've got the Dow, the S&P 500 in all-time highs. We saw that growth number on the weekend out of the US was as good as we expected. Yeah. So I think adding it all together, looking at the question marks over Italy.
Around European banks.
European banks, exactly. That's what hurt the market this morning. So putting it all together, it makes sense not to be excessively optimistic, which I'd love to be.
So the narrative the market could be running off now will be around global growth, European banks, and concerns around oil, which sort of links to that.
Yeah, and oil's down a bit, and also the management of the post-Brexit thing as well, and the Italian referendum. All these things and Donald Trump. There are a lot of curveballs out there. I'm just wondering whether we can actually hit them into the stands.
Let's move on. Interest rates. RBA made the decision yesterday to cut interest rates to a historic low. Your thoughts on the decision? Why did they do it? Was it all in regards to inflation, or was it related to the currency?
Both. I think the fact that inflation is down around 1% staggers everybody. Anyone who's been watching this economy can't believe 1%, but it's a case. It's true. But the Aussie dollar is the big problem. We're around 76, 77 until that was cut. Now we're down to 75. The Reserve Bank wants it at 70 or 69.
They really, the Reserve Bank really have been jawboning to get a six handle in front of it for some time now. They haven't been able to get there. They got close, but they haven't been able to get there based on the fact that our interest rates are higher than the rest of the world.
Correct. We were 1.75% until yesterday on our official rates. The Yanks are closer to 0.5%, nearly, verging on zero. Japan's negative, Europe's negative. So we look like the best house in the crappiest street.
Yeah, we've still got some bullets to fire if we need to.
Exactly right. And also, our economy is doing well. We're growing at over 3%. I said to you, America's growing at 1.2%. We are a pretty good economy compared to most.
Moving on, media stocks. So Seven West Media has copped a battering yesterday when it talked about
Nine as well.
Channel 9 as well. But Seven talked about its earnings coming down, 15 to 20%, based on bigger content costs, the Olympics, the AFL, and a fairly tough media landscape. We had Fairfax write off $1 billion recently. You mentioned Nine Entertainment Company just then. Do you think these stocks are a buy, or do you think you've got to stay away with what's happening in this disruptive world of media?
Yeah, look, there could be a slight overreaction in terms of the initial sell-off, but I think they're going to be challenge stocks for a long, long time. Facebook and the equivalents like YouTube, Facebook,
Alphabet, which is Google.
Yeah. People go to them all the time, and they're not going to, and like Netflix as well. Like you got people turning on their TV and going to Netflix or iTunes or Apple TV to try and get their entertainment. So it's just so tough for those free-to-air TVs.
Charlie Aitken wrote a great article in the Switzer Super Report talking about these stocks that he calls the mafia stocks.
The mafia stocks.
You should go and read that at switzersuperreport.com.au, where you can get a free 21-day trial.
Microsoft, Amazon.
We'll leave them to read the rest.
And they can read the rest, good point.
That's all we've got time for. I'm Marty Switzer.
I'm Peter Switzer, and we're mad about money.